Okay, well, let's continue here. Bill Gross joining us from Pimco. We welcome all from Bloomberg Television. Good morning, Betty. Good to have you back from New Orleans. Bill Gross, you talk here about the Greece story here. Spreads there, I'm going to call them stabilized. How does Pacific Investment Management play the Greece debacle?
Well, we stay away from it. There are simply much more attractive alternatives elsewhere that stand a better chance of solvency, so to speak, and of getting your money back at spreads of 300 over. There's no immediate need to rush in there. I mean, Greece, to my way of thinking, is symptomatic and symbolic of the global economy over the past 25 years, in which countries and companies and households borrowed too much money, and now they're being forced to delever. The problem with Greece is that it can't issue in its own currencies. Its initial conditions in terms of outstanding debt and projected deficits are terrible and abominable. And its central bank, basically, the ECB, is maintaining high real interest rates as opposed to negative rates. And
there's a Pimco siren in the background. That means we got to bring in Mike McKee. Fire drill with Bill Gross. That means bring in Mike McKee. What do you got, Mike?
Well, you talk about those criteria for Greece and the fact that they can't issue their own currency, et cetera. Two countries that can, you write about in your most recent investment outlook, are the U.S. and the U.K., and that makes you a bit more sanguine about them, but you're still not letting the U.S. in particular off the hook.
Yeah, I think so. I mean, the U.S. has some initial conditions that are abominable as well, and future conditions. I mean, there's a estimated $40 trillion present value of entitlements in the United States, and to my way of thinking, the recent healthcare reform has added about $500 billion to that. Certainly a small increment, but a trend nonetheless that suggests it's going higher and higher and higher.
I want to follow up on that in just a second, but we skipped right to the U.S. talking about that, but U.K. has problems, and a lot of people wondering if they're the next Portugal, Greece.
Oh, I don't think so. The U.K. can issue in its own currency. They can, in effect, devalue by depreciating the pound, where Greece cannot. And so, to my way of thinking, countries such as Japan and the United Kingdom and the United States that basically can print won't default outright, but they'll default via reflation and devaluation. That's the trick. So the UK is, at least at the moment, out of a crisis situation, but that doesn't mean that their bonds are attractive, simply because the reflationary episode produces lower prices in bonds and negative returns.
Bill, let's bring it back to the United States. We see healthcare reform. Does that change domestic Pimco strategy?
Well, at the margin it does. I mean, it's not a positive. To me, it's like the prescription drug bill passage of several years past, where a few years later, investors basically realized it was a huge entitlement. To me, it's the same thing here, although we await, obviously, what the numbers will be in terms of its effect on the budget deficit. But the minute you legislate a huge entitlement like this, like 30 million more people on the rolls, and suggest that it's paid for, it lends suspicion from the standpoint of an investor that, we've been conned one more time. And so, what does that mean for the 2 year? Well, probably not much.